Investors at U.S.-China trade talks, oil steadies after Trump-induced plunge. All of Wall Street's major indexes finished in positive territory on Friday after being down as much as 70 points. The Dow Jones Industrial Average climbed 81.25 points, or 0.3% to close at 26,543.33. The broad S&P 500 index of large-cap stocks gained 0.5% to 2,939.88, a new record high. The technology-focused Nasdaq Composite Index also hit record highs, gaining 0.3% to 8,146.40. Consumer staples, financials, and healthcare rallied, while energy stocks plunged 1.3% amid major losses in oil prices after President Trump said he was holding OPEC to account for higher fuel costs. The rally on Wall Street was mainly due to spectacular U.S. data that showed the country's economy had regained the momentum at the start of the year. Gross domestic product accelerated 3.2% annually between January and March. That was the best start to a year since 2015 and was much higher than the median estimate calling for 2% growth. Net exports added 1.03 percentage points to the GDP tally, and meanwhile, consumer spending and business investment slowed considerably compared with the fourth quarter. On the trade front, China and the United States remain locked in a prolonged trade dispute, though signs of progress have emerged in recent months. According to various reports, the Trump administration is eyeing a resolution to the tariff war by the end of next month. Trade talks set to resume on Tuesday. Both sides are eager to reach an agreement, but significant issues were still unresolved ahead of the next round of trade talks. The Chinese Vice Premier Liu He said he will lead a Chinese delegation to Washington for additional discussions starting May 8th. Negotiators have indicated that they are close to a deal, and Trump last week said Chinese President Xi Jinping would visit the White House soon. At the same time, there are reports that Trump would walk away from the negotiating table if he was not satisfied. Asian stocks had a mixed session on Monday despite Wall Street's bout of strength at the end of last week. The MSCI's broadest index of Asia-Pacific shares outside Japan gained 0.38% as concerns about the global economy eased after data showed that profits at China's industrial firms grew in March after 4 months of contraction. Japanese markets are closed until May 6th on a holiday break, which sees the traditional Golden Week celebration. Shanghai was down 0.1%. Australia's ASX 200 retreated modestly from last week's 11-year highs, but remained relatively steady. Hong Kong's Hang Seng, meanwhile, rose 0.7% by the end of the session. In Europe, Spanish stocks fell on Monday after no political party emerged with a majority on Sunday elections, while weak oil prices weighed on shares across the rest of the European continent. The Spain IBEX led losses for regional indexes, falling nearly 1%. The Stoxx Europe 300 gave up modest gains to slip 0.3%. In the UK, the FTSE 100 was flat. France's CAC 40 fell 0.4%. In Italy, the FTSE MIB fell 0.4%, following Friday's 0.1% increase. The greenback suffered a sell-off on Friday as the GDP report details made investors skeptical over the spectacular headline growth numbers. The euro-US dollar extended the rebound on Monday, but the impetus was limited due to another series of weak European data. In particular, the Eurozone economic sentiment dipped for the 10th consecutive month to its lowest level in more than 2 years in April. Sentiment slipped to 104 points in April from 105.6 in March, marking the lowest level since September 2016. Sentiment in the industry fell for a 5th consecutive month to negative 4.1 points in April from a negative 1.6 points in March, well below market expectations of a negative 2.0. Sentiment in services, meanwhile, was unchanged at 11.5 points in April against expectations of a dip to 11.1. The mood of consumers declined to negative 7.9 points in April from a negative 7.2 in March. As a result, the euro struggled to overcome the 1.1170 intermediate resistance and saw only mild intraday gains as the greenback regains relatively steady. The U.S. core personal consumption expenditure price index came in at 1.6% on a yearly basis in March, falling short of the market expectation of 1.7% and moving further away from the Fed's 2% inflation target. In commodities, crude oil prices saw a mild recovery following Friday's plunge by over 3% after Trump said he called OPEC and told the producer group to pump more oil to offset U.S. sanctions on Iran. Meanwhile, Baker Hughes on Friday reported that the number of active U.S. rigs drilling for oil fell by 20 to 805 this week. U.S. oil drillers this week cut the most rigs since the week to January 18th. That followed a decline of 8 during the previous week. Investors will now eye a U.S. Federal Reserve meeting and Chinese factory data due this week for further cues about the health of the global economy. And that is all for today. Thank you so much for watching. Please click subscribe to always be in touch with the latest market news.